When Tata Technology listed on the Indian Stock Exchange in November 2023, it rewarded its IPO investors. As against the issue price of 500, the stock listed at about 1200, a premium of 140%. On the listing day, the stock gained another 10% and closed at 1314 rupees. Overall, from its issue price, the stock returned an unbelievable 163% returns in just one day. Now, Tata Capital, the NBFC arm of Tata Group, has launched an IPO raising 15,512 crores. It is going to be the biggest and one of the most awaited IPOs of 2025. Now, will it thrill the street like its cousin Tata Technologies and bring an early Diwali for the investors? Should you invest in this IPO? We'll try to find out in this video. Hello and welcome to ET Money's YouTube channel. Now, Tata Capital's IPO opens on Monday, 6th October and closes on Wednesday, 8th October. Now, in this video, we will analyze Tata Capital's IPO in a 360-degree manner so that you can decide if it's worth investing in. This video belongs to our IPO playlist. To watch more previous IPO analysis, you can explore it. The link is in the description. Okay, let's start with checking the key IPO details. The key IPO details are on your screen. The total issue size is about 15,500 crore. Of this, about 6,800 crores is the fresh issue and 8,700 crores is the offer for sale. Now, in a fresh issue, the money raised goes to the company, which is Tata Capital here. In an offer for sale or OFS, the money raised goes to the selling shareholders. Tata Sons and International Finance Corporation or IFC are the selling shareholders here. Now, while Tata Sons is also the company's promoter, IFC is an investor. The IPO opens on Monday, October 6th and closes on Wednesday, October 8th. The lot size is 46 shares and the IPO price band is 310 to 326. Now, at the upper price band, a retail investor will have to spend about 14,900 rupees for one lot of shares. Now, the company's pre-IPO shareholding is about 403 crore shares, which will increase to about 424 crore shares post-IPO. Now, promoter and promoter group stake in Tata Capital will consequently fall from the current 95.6% to 85.4%. So, these were the key IPO details. Let's now take a look at the company's business. But before that, here's something important. You can get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is 10.75 only and there is no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. But wait, there is more. A special offer is currently live and if you set up your account during this period, you will pay 9.99% per annum for the first 3 months. Okay, as we mentioned, Tata Capital is a subsidiary of Tata Sons and is the third largest non-banking financial company or NBFC in terms of gross loans. Its lending products are offered to 3 business verticals: retail finance, SME finance and corporate finance. Now, these 3 verticals comprise multiple lending products including home loans, business loans, auto loans, commercial vehicle loans, personal loans, infrastructure loans, etc. Now, apart from its lending business, the company also provides third-party products such as insurance and credit cards, wealth management services to HNI, and private equity services. Now, as of June 2025, its loan book stood at 2.33 lakh crore. Of this, retail finance constituted the largest share of 61.3%, followed by SME finance at 26.2% and corporate finance at 12.5%. The company's loan book is highly granular, with ticket size ranging from 10,000 to 100 crores. However, the interesting part is that 98% of the ticket size is below 1 crore. Moving further, about 80% of the total gross loans are secured and 20% are unsecured. Now that we understand the loan book, let's see how changes in interest rates could impact Tata Capital's profitability. We are in a rate cut cycle and for Tata Capital, that's not great news. You're wondering why? Well, because 64% of its loan book is on a floating basis. Now, what that means is with interest rate cuts, the interest income from customers goes down. Now, look at the borrowing side. Only 45% of Tata Capital's borrowings are at floating rates. So, what that means that its cost of funds doesn't drop as much when the RBI cuts rates. So, overall, an interest rate cut is not a positive sign for this company. Now, moving further, as of June 2025, 97.5% of the company's revenue came from its lending activities. As of June 2025, Tata Capital's customer base stands at 73 lakh and has risen by 128% in last 2 years. Now, the company has a pan-India network of about 1500 branches in 1100 towns and cities across 27 states and union territories. However, around 42% of Tata Capital's branches are located in southern India. So this was about the business of Tata Capital. Now, as far as industry's outlook is concerned, NBFC credit growth is expected to be about 15 to 17% per annum between FY25 and FY28. That's higher than the growth of 13.2% per annum between FY19 and FY25. Not only this, but this growth is also higher than the overall credit growth of 13 to 15%. Now, this suggests that within finance companies, NBFCs are expected to grow faster. This is a plus for Tata Capital. Now, this brings us to the next section, financials and valuations. But before we start with that, do subscribe to the channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. Now, before we examine Tata Capital's financials, it is important to note that Tata Motors Financial Limited, our Tata Group subsidiary, recently merged with Tata Capital. As a result, Tata Capital's FY25 financials have been impacted by this merger. With this in mind, let's take a look at some key financial metrics of Tata Capital. Over the last 2 years, the company's revenue has risen from about 13,600 crores to 28,370 crore, or 44.2% annually. Net profit has also increased from 3,000 crores to about 3,600 crores. However, at just 10% per annum, the profit growth is sluggish in comparison to the revenue growth. The ROE or return on equity has fallen from 20.6% to 12.6%. The average stands at 16.2%. Now, a similar downtrend is seen with the ROA. For that, the average stands at 2.3%. Now, the company's bad loans or non-performing assets have increased from 1.7% to about 1.9%. The net interest margins, which is a profitability indicator for finance companies, has been stagnant. Overall, Tata Capital has managed to increase its revenue, but it doesn't impress much with its profitability metrics. But that's only half the picture. To get the full perspective, we must also compare Tata Capital's numbers with those of other listed NBFCs. So let's do that next. Take a look at the table on your screen. It lists some key financial and industry metrics for 6 of Tata Capital's peers as stated in its RHP. In terms of market cap, Tata is second after Bajaj Finance. Tata is the third in terms of loan book size. At 37.3% per annum, Tata's rate of loan growth is in first position. Its profit growth of 44.2% is also way ahead of all. However, profit growth is one of the weakest. Tata Capital's average ROE is at the 4th position, and the 5th position, its average ROE is one of the worst. At 1.9%, its NPA is one of the lowest, and that's good. Finally, as far as the average net interest margin is concerned, it's worst among all. Overall, Tata Capital's financials and key industry metrics are neither too bad nor too good as compared to its peers. Finally, let's compare Tata's valuations with those of its peers to see if the company's middling performance is compensated by the valuations. For finance companies, the price to book ratio is the go-to measure. So we will look at that. In terms of attractiveness of valuations, Tata Capital is in the 3rd position. It's cheaper than Bajaj Finance and Cholamandalam, but more expensive than HDB, Sundaram, L&T and Shriram Finance. Now, one thing to note here is that Tata Capital has reduced its valuations as compared to the valuations of its unlisted shares. That may indicate that the company was wary of launching its IPO at prevailing valuations, perhaps because there are already better options available in the market today. Next, let's take a look at the most important red flags of the Tata Capital IPO. In IPO investing, it isn't sufficient to evaluate the business and financials. One must also pay attention to certain IPO related metrics. Now, we discussed them in our video on analyzing IPOs, so you can watch that video to learn more. In that video, you will also find 5 IPO hacks to increase your odds of success in IPO investing. So, do watch it. As always, the link is in the description. Here, we will discuss the red flags of Tata's IPO based on those metrics. First, much of the IPO proceeds will not go to the company but to the promoter. As we discussed towards the beginning of this video, of the total issue size of about 15,500 crore, about 8,700 crore or 56% is an offer for sale. So, this money won't be utilized for the company's growth. Second, the company's earnings or net profits are highly sensitive to interest rates. For example, a 1% or a 100 basis points rate cut can significantly reduce the company's equity or book value, which can in turn affect its profitability. However, do know that the reverse will happen when RBI increases interest rates. Third, around 20% of the company's loans are unsecured and hence are not backed by collateral. Such loans can prove to be a major pain point during challenging economic times. Okay, let's now summarize the findings of this video in the concluding section so that you can decide whether or not you should invest in Tata Capital's IPO. The greatest strength of Tata Capital is the parentage of the Tata Group. Tata is one of the most reputed business groups, not just in India, but also in the world. And this sets apart the Tata Capital IPO. The company has pan-India distribution and a diversified product portfolio. It enjoys high loan and revenue growth. Its NPAs are among the lowest as compared to its peers. However, the IPO has come against the backdrop of RBI's interest rate cuts. As discussed, interest rate cuts can significantly impact Tata Capital's profitability. So, this is a major concern. Apart from that, the company has middling profitability metrics. Now, while the IPO has been launched at a steep discount to the price of the company's unlisted shares, the valuations still remain on the higher side. There is no dearth of NBFCs in the listed space, and Tata Capital may just prove to be another addition in an already crowded space. Now, even after the IPO, the promoter shareholding will continue to be 85%. So, there's always a chance that promoters will sell more shares to meet the minimum public shareholding requirements. This can keep the stock price in check for the foreseeable future. Notably, when Tata Technologies, its group company, dazzled investors on listing, its stock price have halved since then. This is surely a cautionary tale that suggests that brand name alone isn't enough for stock market performance. The shareholder of Tata Capital's unlisted shares have already burned their fingers. Given this, what do you think about Tata Capital's IPO? Will you invest in it? Do let us know in the comment section. And that's all I had for you today. I hope you found this video useful, and if you did, please share it with your friends and family and help us reach more people. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.